Hello, everybody. It's Dr. Ray dropping in on you. I am not going to be long today. This is Wednesday, so it's Wealth Building Wednesday, and I want to talk to you about four principles, four rules, four practices that all financial winners play by. It is something that you should write down, something that you should research, something that you should study, and even on a micro level, begin to practice. It's financial awareness. It's being aware of your financial situation and understanding how each move affects you. We tend to move on emotion, we tend to move on impulse. Uh, it makes us great consumers, it makes us horrible investors, and I want to talk to you about that today. Before I do, I want to remind you, look, I created the Legacy Wealth Path to Generational Wealth course. It took me 10 years of research, 10 years of interviews, 10 years of really, truly studying things that were actually beyond my pay grade to develop an understanding. And it's definitely helped me. Not that I wasn't doing well, but it's taught me so much in how I move and how I operate since. I created it for the average person to study and to learn and to start developing awareness and to develop practices, thinking, and behaviors that ultimately change their financial situations for the better. Yeah, the information is in there for signing up for this course, and there's a reason that I'm mentioning this. Just for just on the surface, you're going to get more than 10 guides in diversity investment strategies, one-on-one consultation with a trust advisor, course on the importance of insurance and wealth building as a wealth building mechanism, tap the power, of course, on compound growth, the 10 commandments of wealth building, passive income guide, and class asset protection guide and class 7 steps to financial freedom course within the course, shattering the 9 myths, a 9-week course within the course, know the price of your dream, learning how to calculate the cost of your vision and your dream. The things that you desire to have a price tag on them, know what they are so that you know how to plan to produce and sustain them, the importance of timing, the psychology of success, and more. Right now, you can either pay for the course in full. There's a link in there. You can go to the platform itself, register for the course, enroll. You can either pay in full or you can start installments. Installments will give you immediate access. Here's the difference. If you pay in full, you get the 7-day online. You get the 7-day online business launch course, which is a $600 value. You get that free. You also get a free bronze coaching package, which is a 12-week, 12-session coaching package with me, worth $3,500. You get that for free. So if you pay in full, you get the bonuses, but that's only for the next 24 hours. If you pay in installments, you get to pay in installments. That's the difference. Also, if you want to get the 7-day online business launch course, which is the blueprint I use to create streams of income online, whether you have a product or not, that link is in the description box as well. You have to start taking steps. Let me tell you why I'm so emphatic about wealth building, why I'm so emphatic about financial awareness, why I'm so heavily pushing things that allow you to create multiple streams of income. Here's why. Because from the end of October, moving into the Halloween holiday celebration, or whatever you want to call it, through Christmas Eve, Blacks will spend $560 billion on the commercial celebration and purchasing of gifts and decorations and all of these different things. And the vast majority of the people who are purchasing these things are not in a financial position to do so based on normal financial evaluation strategy and assessment. We are highly consumerized in our thinking. We don't have the mindset to create wealth, and we will sit up and complain and say over and over and over and over and over again that we can't build wealth because we don't have it, and then go out at this time of the year and overspend for the sake of saying we did something. Granted, Commercialism drives you. Everybody wants their kid to have what all the other kids have. Everybody wants their kid to have a celebration in many instances that they never got to celebrate. So we go out and we overdo it, never sitting up and thinking that we are training our children to do the same thing. We're training our children to rob themselves of the opportunity to build a financial future. And I watch this happen year in and year out. And the thing is, take a percentage of that. I'm not saying kill your Christmas. Uh, to me, I'm extreme. I'm radical. When I see something that needs to be done, I go all in. I'm the kind of person, I'm going to take the hit now so that I can reap the benefit later. If that means not going on a vacation for a year or not going on a vacation for 2 years, if it means not buying anything new for 2 years, whatever it is, I'm radical like that. But you don't have to be completely radical in it, but you do need to be revolutionary in your thinking when it comes to money. So no, don't kill the whole Christmas. If you don't want to be radical like me and say, look, I'm not, and I'm not, this is a elevate year for me. So I am literally not spending money on Christmas. I'm going to love on my kids. Fortunately, most of my kids are adults. So that's not a big deal. My youngest, she understands. Plus, I spend time and I take care of her on a regular basis. We have that relationship. So we have the conversation about this now. So she'll get things, but the whole blown out, going all out and spending all this unbelievable money on something that after it's gone, it loses its impact. The emotional drive in it drops, and then you realize you have all these bills because a great deal of it is going to be purchased on credit, and that's debt, and debt is the number one enemy of wealth. We've got to change our thinking. We've got to move differently, and this is why I created the Path to Generational Wealth course. Again, those who sign up within the next 24 hours and pay in full, meaning you don't use the installment plan, but you pay the full price. You have the option when you go to do either. Those who pay the full price get the 7-day online business launch course free. That's a $600 value. And they get to work with me for 12 weeks. That's a $3,500 value. You get all of that for free when you pay in full. So you have that option. But let's go real quick. 4 things that every financial winner, the people that I interviewed are the winners of the winners, the top of the top. They are the people, when you say their name, you know them. When you see the course in the syllabus, you'll see the people that I interviewed. But basically, there are 4 things that are, no matter what particular strategy they use, or what they like to anchor them in, whether they're heavy in stock, whether they're heavy in real estate, whether they're heavy in art, whatever their major play is, the primary principles of behavior are the same. The first is protect against loss over the pursuit of gains. In other words, these people, to a man and woman, literally, when they're looking to whether or not they're going to invest in something, they don't ask themselves how much can they make. They ask themselves, how much do I stand to lose? What is the risk of losing? Now, this isn't a form of risk aversion. This is a form of risk evaluation. This is a form of knowing what this could cost me on the bottom end. You have an upside, you have a downside. Most people, when they get caught in, and to me, the difference in many forms of gambling and investing is not understanding your downside, not protecting or hedging against your downside. And that's a major problem when you don't have things in play. And that's why I love the 7-day online business launch course, because multiple streams of income help you hedge against things, because you're not counting on one form of income to support any of the things that you're thinking about doing. And I think that's extremely important. We also, and this is a slight digression away from this, we've got to get out of the thirst for sensationalism. We'll jump on all different types of things that bring no intrinsic value, no growth, no development, no preparation for our future, and lose our minds. We'll share it with everybody. We'll pass it along to everybody. We'll get all hyped up, and it's great. Nothing wrong with being entertained, but entertainment doesn't put money in your bank. Entertainment doesn't grow your investment portfolio. Entertainment doesn't create a prepared path for your progeny, your offspring, your children, and their children, and their children, and their children, so that they don't have to start in the same place you start. This is the difference between generational wealth and perpetual poverty. It's a mindset. It's a lack of focus on the things that you need to focus on. And we consistently and continuously keep losing because we want to be entertained. Now, if I got on here talking about what's happening with Diddy, if I got on here talking about what's going on between Buster and Benzino, all that stuff, man, you look up, the likes will be popping. And it happens consistently. And the thing is, none of that's going to feed your offspring. None of that's going to build you. Those people have built a life, a lot of it on your consumer mindset. And now you're sitting up and you can't get out of that. You're going to have to. That's me on my tangent. I digress. Look. The first one is protect against loss over pursuit of gains. In other words, know what you stand to lose more than what trying to evaluate what you stand to gain. That's exactly how the lotto wins constantly. Nobody's looking at what they're losing. Everybody's looking at what they stand to gain. Now, everybody's thinking, look, I'm only spending $10 and I could win $1 million. Asymmetrically, that's awesome. The problem is, what's the probability? So the probability is more than likely you stand to lose the $10. Far more likely than you stand to gain the $1 million. So is it a worthwhile investment, or is it just plain fool's gold? And yes, somebody eventually wins, but how many people had to lose for that one person to win? That's called a zero-sum game. The zero-sum game says for a person to win, somebody has to lose. And when you come to something like the lotto, a bunch of people lose for the one person to win, but the ones that who really win are the people who created the lottery in the first place. So again, that is that. So the protect against a loss over the pursuit of gains. This number 2 is asymmetric risk reward. What is asymmetric risk reward? I sort of talked about it in a few seconds ago. Asymmetric risk reward is the ability to evaluate opportunities to invest in which you find where you can invest small amounts to get larger amounts. You hear all the time from people who don't know what they're talking about, and you hear you have to invest a lot to get a little. So if you invest this, you can expect a return of 20%. 20% in the right situation over a long term, especially if it's compounded, is absolutely wonderful. If you're looking for short-term gains, a 20% return isn't all that great when you can look at what can be done. Asymmetric risk reward says instead of investing 80% of something to get 30%, instead of investing $100 to get $30, I'm looking for things where I can invest $30 and get $100. That's asymmetric risk reward. That means that I am getting more out of my investment than I put into my investment. And that's what real major players do. And you know who are absolutely phenomenal at this? Crisis investors, those people who wait on the economy to take a hit in a downturn, especially in the stock market, especially in the real estate arena, where property values drop, stock prices drop. They wait for it to drop and they buy them at pennies on the dollar. And when they recover and they bounce back and the industry corrects itself from the overcorrection from inflation, then they simply benefit from it. And so they'll buy a stock that was once $400 for $25, for $35, and then they'll sit up and they'll hold it, and it'll recover and it'll go back to its original price, give or take up $10, $15 one way or another, but it's going to return. That's why you understand and you do your research on the companies that are publicly traded, so that you know the power and the strength of companies to survive volatile economic events, because that's going to happen. It's systematically happened every 4 to 5 years over the last 100 years, and it will continue to do so. It's just simply the process of correction, recorrection, and sometime overcorrection, and all of that stuff. And the bottom line, you learn all that. But asymmetric risk reward is saying I'm going to pay a small amount to get a bigger amount than what I invested. Minimize tax liabilities. Not one person I talked to weren't were not aware of what their tax liabilities were for their capital gains, for the returns on what it is that they were going to be receiving in way of return on their investment, their ROI. And so they are aware of that. And that's one of the things. And then they were also actively engaged of providing tax shelters and protection from being taxed as much as possible. And there's so many different ways of doing that and operating in that. And you learn about that in the course, everything from incorporating, or more importantly, an unincorporated business trust. A trust operates in a way that literally protects and shelters anything that isn't independently or individually distributed, meaning that you can operate and control expenses and expenditures and all of that stuff within the trust as an business expense, and that money is never taxed. And there's not the dual taxation that you see when you have a corporation. It is a bunch of different things that you can look at, but you need to be able to learn about these things. Finally, diversify. Number 4, diversify across access to hedge against risk or loss. What does that mean? Don't put all your eggs in one basket. It means that no matter how well a particular industry is doing, no matter how much it's blowing up, you don't dump all your eggs in one basket. So what you do is you do your research. Say you have 10 different asset allocations, and in each asset you have a certain amount based on how that asset performs over time and how that asset has historically performed. You then sit up and you build and you build and you grow. What happens is nobody's perfect. Nobody can predict the market. Now, this came directly out of the mouth of Warren Buffett, Ray Dalio, and David Swensen, out of the mouth of three of the most prolific investors and money managers this world has ever seen, has said they can't predict the market. Then what do? You find companies that perform and you trust their performance over time, meaning that there are going to be times that those companies take hits as well. This isn't about getting in, getting out, getting out. That active trading will get you in the long run. Trust me. You want to buy winners and hold those winners. And there will be certain catastrophic events, unpredictable events that may lead you to have to liquidate a certain asset, but you should be well aware of what's going on and the reason for liquidating before you do. I tell people all the time that when you purchase stock and the price of the stock drops, you don't experience a loss until you sell. Until you exact an exchange for what you have already purchased, you haven't experienced the loss. You've experienced a depreciation in value that hasn't been realized because you have not transacted out of ownership. What does that mean? If I buy something at $50 and it drops to $40, I haven't lost $10. My stock has devalued $10. I hold the stock and it goes back up and then increases to $50. I now have that value plus $10. But if when it drops to 40, panic and sell, I've locked in the loss. So then I've lost what I have invested. I've lost $10 of what I've invested. And so that's the thing that you've got to be aware of and understand in this whole thing, is that you want to diversify. You want to do that. Why? Because if I'm really truly aware of what I'm investing in, if I've done my research, if I have the right people around me to tell me and teach me the things I'm not yet aware or haven't developed a level of expertise for, and I purchase these assets with confidence, 2 or 3 may turn left on me. They may go bad on me. But the 7 that go well will hedge and leverage against the 3 that go wrong. I still win. That's why you diversify, because the chance of all of your hard work and research and investing in right companies, the chance of every last one of them going wrong all simultaneously is highly unlikely when you do it right. Anything is possible, but your thing is you're reducing the chance of risk and loss by being educated and aware of what's going on. Again, those are the things. So number 1, protect against loss over the pursuit of gains. Number 2, asymmetric risk reward. Number 3, minimize tax liabilities. Number 4, diversify across assets to hedge against risk and loss. Again, I spent 10 years talking to the people who the people talk to, uh, and getting the answers and getting the feedback and taking the lessons learned and putting them in a course to present them to you so that you have the answers. Now you have to take the answers. You have to be willing to go. You have to take it, learn it, develop it. And here's the thing, when you learn it and develop it, when you put it into practice, when you start to see it manifest, start to teach others, start to change the conversations in your family, start to change the conversation at family gatherings, start to change the conversation between your friends, start to look at how many trips you take a year differently, start to look at how much you spend on your vehicles differently, start to look at all the ways that your money is moving differently, because now you develop an understanding of how this thing really works. What side of the equation are you on? Are you a consumer or are you an investor? Are you plugging and playing the process that feeds the extremely and elite wealthy, or are you slowly developing to a person who is building their own wealth? That's the question. That's the decision you have to make in your life. You should make that decision from an educated position. Am I a consumer that is making other people rich, or have I developed a mindset in which I'm going to start investing in my future and the future of my progeny, my offspring, my children, my grandchildren, their grandchildren? It is a step-by-step process that anybody can take. I have told you about Earl Crowley. I tend to call him John Crowley for some reason, but his name is Earl Crowley, a 12-year-old parking lot attendant. A parking lot attendant who only earned $12 an hour his entire life, but yet retired extremely wealthy, having paid off his house, sent his kids to college, an investment portfolio of well over $500,000, plus a bunch of other things that he had going on, and he was still growing it. But that was from a $12 an hour salary, with 3 kids and a wife to take care of. So don't tell me it can't be done. Tell me you're not willing to make the sacrifices. Tell me you're not willing to change the way you think and approach things. Tell me you're not willing to step away from consumerism and the push of media to force you to buy things in order to feel like you belong, in order to feel like you're accepted, in order to feel special, in order to make your kids accepted in school. We have literally been bullied into blowing what we could be investing, and that mindset alone is destroying the chance for a financial future that every person has. Now, every person doesn't have the same path. Every person won't get there in the same timing. This isn't to sit up and crap on the time or the environment you were born into. I know what poverty looks like. I also know what it means to sit up and say, this is not my lot in life. This is not how I'm going to end up. I am going to grow into someone who does something beyond what the people in my family have done up to me. This isn't taking a crap on them. This is saying what they were given, they did the best they could with what they knew. But I know something they don't know, and it's my responsibility to execute it. But it's also my responsibility not to lord it up and say, look what I'm doing. Y'all wish y'all could do. It's to sit up and say, look, I did it. Let me show you how I did it. Matter of fact, instead of just saying, look, I said, let me go out and find people that's done it a million times better than me and sit under them, put my ego aside, and realize that while I've done better than most people where I come from, I haven't scratched the surface of what's possible. Teach me. And I did that. And now I'm sharing it with you, but you've got to take advantage of it. Again, in front of you is an opportunity. You can sign up for this course. It's an 18-month course, but there are so many courses within the course. So within a month or so, things will begin to change. As you study, you'll start to learn, you'll start to develop new mindsets, you'll start to have new practices, and you'll see you can buy your first stock the first day. You can, which means now I own a part of a Fortune 500 or a company that is profitable. I literally have bought in, and I can do that for as little as $1, anywhere from $1 to $10, depending on what platform and broker you use, online broker you use. And there are some good ones out there, and you learn that in the course. Look, let me tell you something. You are not trapped in your financial situation. You are buying into it, literally. And what you're going to have to do is decide, this stops today. I'm not going to consistently do this. I'm not doing this anymore. I'm going to do something different. And whether you sign up for this course or you just get the 6-day online course, 6-day online business launch course, which will give you multiple streams of income, something that everybody should have. In other words, the whole idea of wealth building is to give your money a job. You cannot work yourself to wealth. You can't. And that's what we grew up talking. Work hard, work hard. And we grind, we grind, we grind. And some of us do pretty good with grinding in comparison to what other people are doing, but not in the grand scheme of what's possible, because we bought into a flawed idea of how things work. And we are literally being exploited in our hard work by the people who were smart enough to know the game is played a different way. You've got to start recreating the structure of how you move in finance. And it's a step-by-step process that anybody can take if you're willing to make some sacrifices, if you're willing to make some moves. It's going to be a longer process if you're further off and your resources are limited, but you better start now. Again, that's me sharing that with you. Look, I want everybody to win in life, not just in finance, in your relationships, in your careers, in your pursuits, in your impact in this world. But it starts with understanding that you can't sit up and wait for somebody to bring something along. There's no magic win. There's no wishful thinking where things drop out the sky and fall in your lap. It's about the world you create through a step-by-step process of becoming someone different. And in becoming someone different, you think different, you behave different, you act different, you get different. This is an ongoing journey through life. So that's my challenge to you. I'm about to jump off of here because I have a client that I have to get to, but I did need to share that with you. On that note, I am going to check out. As I always say, I live my life on full so that when I leave this place, I die on E. I challenge you to do the same thing.